Welcome to Sonny's Car Wash Factory. I'm Bob Fox. Some of the frequently asked questions we hear are, how do I obtain financing to start a new car wash project? I'm here with Mike Ford of Coast Commercial Credit. Mike, thanks for being here.
Thank you, Bob.
So I want to get into the car wash business. What are some of the most popular ways to obtain financing?
Well, the most popular way to obtain financing for new investors in the car wash industry would be the Small Business Administration. The Small Business Administration, or SBA, they give a guarantee to financial institutions, banks, and non-bank lenders to give loans to people that are entering into business. This is compared to a conventional loan. A conventional loan is just a loan that is that the financial institution enters into on its own at full risk. And so if anything goes wrong, they don't have a guarantee. For example, in a SBA 7A loan, there's a 75% guarantee that is given to that financial institution in case things don't work out. Another way to obtain financing, for example, if you're acquiring a car wash, the owner may carry a note, a seller carry, owner carry. And an owner carry is probably the easiest way to get into the business, but it's also the most hazardous. If you are entering into a owner carry, you want to make sure that you use professionals, a real estate attorney, a title company. You want to make sure that that property is free of liens and the borrower doesn't have any loans outstanding against it.
Gotcha.
Okay.
If I decide to finance my wash with a bank loan, what terminology should I become familiar with and why?
Okay, the most common phrases or terms are injection, and that simply is a banker's way of asking you how much cash you have, how much money you have to put down. Also, LTV or LTC. LTV, most people are familiar with, it's loan to value. What most people aren't familiar with is LTC, and that's loan to cost. In commercial lending, generally loans are based on loan to cost. So, for example, if you are building a wash and it's $3 million, and that wash appraises at $3.5 million, the banker is probably going to base the loan on the lower of the two, the loan to cost, which would be $3 million.
Okay, I understand. What's the difference between an SBA 7A loan and a 504 loan?
The SBA 7A is a loan that it includes all items. For example, it includes working capital, it includes contingency, and contingency is funds that are set aside in the loan so that you don't have to, in case there's a change order, you're able to have the funds in the loan. Also, working capital, inventory. Whereas an SBA 504 loan does not include working capital and inventory, and it does not include a construction loan. And so, so you have to get a separate construction loan if you're getting a 504.
Okay.
The reason why people like the 504 loan is because a portion of the loan has a low fixed rate for 20 or 25 years. And so while it takes longer, 30, 60, 90 days longer to get a 504, people like the 504 loan, but most get an SBA 7A.
What do I need to qualify or apply for a loan?
To qualify for a loan, the very first thing, actually the first three things are, do you have the money, do you have the money, and do you have the money? It's all about down payment. Now, I'll give you an example. Another difference in the SBA 7A and 504 is that the SBA 7A, you can go get an SBA 7A loan for as low as 10% down. So typically 10 to 20%, probably on average 15%. On the SBA 504, though, you're required to put 20% in, okay, plus working capital and inventory. So you end up at about a 22% injection on a 504 loan. So, so again, do you have the money is a very important question. Other things that experience is not required. That's one of the things. That's what the SBA is here for, is to help grow and build business in the United States. Okay. And so experience is not required, but you want to look at other things such as credit score. Credit score, everybody knows what a FICO score is, Fair Isaac credit score. And that generally is probably about 650 and above. But it really depends upon what's in the credit score. You know, if there's a lot of extreme derogatory credit, you know, that could be a problem. But, you know, I've had clients where they've had small medical collection accounts that have really damaged their credit score. So it's a holistic look at what's inside the credit that's important.
Gotcha. What tips can you offer about car wash finance, and what's not included in the car wash loan?
That's probably the best question you can ask, is what's not included. You know, all loans are not created equal. 7A, SBA 7A, and 504 loans can be from different financial institutions, can exclude certain things like working capital and inventory, or can require additional things. I've seen loans where they've said, you have to put in $100,000 or $200,000 in an interest reserve account, just set aside. So you need to know what's not included, what is included. You also want to ask about experience. You want to ask about that banker's experience. How many car wash loans have you done? You don't want to have to be educating that banker on your car wash project. They should know the difference between an express exterior and a flex serve and a full serve. And it's critical because time is money. And you know, in this marketplace right now, if you waste 60 or 90 days trying to educate your banker, you may lose your property, and that's very important.
That's very true. Mike Ford, Coast Commercial Credit, appreciate you joining us today.
Thank you.
And there you have it. For these and other frequently asked car wash questions, visit us at www.sonnysdirect.com/FAQ.